Hi, welcome to today's video update. So I'm standing here today in the city office with the city view behind me here at Barangaroo in Sydney. So three things I wanted to talk about today is the question we're getting a lot at the moment is around geopolitical risk and the tension going on in the Middle East, Ukraine, China, Taiwan, North Korea, South Korea. Also what impact perhaps a US election will make and other elections going on around the world. Also going to just touch on the randomness of returns and what history shows us around market returns. And finally, we attended a speech by Al Gore. Many of you may remember the name Al Gore, who was the US Vice President, almost became President, but didn't quite get there. And he has gone on a sort of climate change agenda the last 20 years or so, and now has an investment fund as well. Has had an investment fund for many years. So we don't like talking too much about product, but quite interesting and some information there. So to start with, the question around geopolitical risk and what impact should it make? Should investors change their strategy? Is the world going to end? All those sort of things that can happen, because it is frightening when you look at the media and the news of what's going on around the world. Some terrible events, conflict, serious conflict in the Middle East, in the Ukraine continuing, potential tensions that are constantly bubbling around China and Taiwan and North Korea, South Korea. So when we look at this perspective, taking away the human side of it, that investment markets over many decades and a long time now sort of gets on with it, and the data that moves on is it's looking forward in terms of what earnings are going to look like, what are interest rates looking like, what's inflation, what are unemployment levels, all those sort of things. And yes, short-term changes can happen when there's conflict, whether it's about oil prices or what's going on in the Suez Canal, the blocking of ships. But what we do see over time is the markets work it out, and markets are relatively efficient. And we can't really predict what's going to happen in markets. What we do know is that despite all these ups and downs, generally investors get well rewarded for taking risk, and we want to manage that risk. So we want to make sure that for those that need access to cash and short-term funding, then you've got to have money in cash and bonds and less risky assets. And for those who can afford that point in time risk, then more allocation to the growth assets, the property and the shares and the like. And how we implement that is very diversified, very structured and very disciplined. So we don't change that philosophy, so to speak. We do constantly attend things and go to meetings and have investment committees around all these themes, but we come back to the fundamentals all the time and not try to make any knee-jerk reactions. So if you've been working for us for a long time, you've heard this story before, if you're relatively new, you'll see that this is a constant theme of how we approach these news events. And that ties into the second part of today's, which will have some information in the email, looking at the randomness of returns over time. So often in times like this, where there's a few events going on around the world, we look at, well, how did markets perform last time there was an event? Or, we've had some big events. We've had COVID, we've had GFC, we've had the Twin Towers back in 2001. We've had conflicts all through those periods and little spikes that often people have forgotten about by now, and downturns. So it's interesting just to see the randomness of returns and how unpredictable it is, unfortunately, and hence you've got to come back to a structure and a process and a real robust process behind it all, which gives us the best chance of success going forward. Finally today, again, not wanting to talk about product, but we attended a session. It was last week. Al Gore spoke. He was here in Sydney and spoke about climate change and the impact that's making, but also they've been running a fund now for a long time. It's a sustainable fund, quite a concentrated fund. A little bit expensive, but it has performed quite well. We're going to have a bit of information on it. We've believed in having sustainable investing as a theme through our global portfolios, through our Dimensional or Vanguard and type index style funds. This is a little bit different. Got a bit of a profile, worth having a look at. Very, very interesting from a perspective, especially if this is something that's very strong to your beliefs around investing. It is something we can implement through every asset class in portfolios now. You can have a sustainable theme across any, whether it's Australian shares, bonds, global shares, if that's what you want to do, and there's some discussions around how that might affect returns. So I hope that's been useful. Bit of information in the email. Please reach out as always if you have any questions.